Today is Monday, February 8th. I want to take a look at banks today, and especially the European banks. But let's start domestically with the KBE ETF. This is the domestic banks ETF, and you can see that from the financial crisis low, this trend line is now broken to the downside. So is this 2-year support level. So that's bad news for banks in general. Now, I've got the Fibonacci's up here, just the standard retracement levels, just to give you an idea of scale, kind of like a stochastic. How far back did the banks were they able to recover? And here you can see around the 61.8. Obviously, I'm not making this precise. It's not important that way. I just want to show that banks came back around 61, 62% of what they lost, and then that was before the breakdown. So let's head over to Europe. We're going to use some some ADRs. I'm going to start with Barclays. This is pretty typical of what bank indices over there might look like. You can see that from the financial crisis, able to get back around 38.2. That's a Fibonacci, again, not being precise, but is all downhill from there. And you could say that maybe it's at the 20% level or so, which is obviously not a very good recovery, if one at all. Moving over to Lloyds, you can see it even dipped below its previous low in 2011 and 12. Didn't get much back, so it's almost all of the bear market is still there, hasn't gained much back at all. Over to Deutsche Bank, you can see recently just broke through its 2008 low. And then Credit Suisse, there was news last week. You could see that it did break below its 2008 lows. It also came down in 2012 to test it, making this a support floor, which is now, of course, broken. So it's really bad news for the European banks, and that just can't be good for anything, no matter how you look at it.